This is Steve Wolff, and I'm here once again for a monthly market report. And this time we're going to be talking about what happened last month in August. And I've got my dogs with me, not my pet dogs, but my little play dogs. And you guys know that I use some of these props. And the reason I've got it is because this is the dog days of summer. I'm sure a lot of you have heard about that. That's, when everybody's hot and sweaty, and it's the end of the summertime, and we're getting ready for the fall. Well, usually August and September are really the two worst months for the stock market. But, August this year, it was pretty quiet and surprisingly quiet. I mean, from the beginning to the end, it looked like we were going to have a little bit of a downward move, but it didn't happen. Markets come back a little bit. We've had some activity, especially something like, what's happening in Afghanistan, which you thought might have had some effect on the market, but it really didn't. Which, by the way, gets me back to what I've said many times in the past, that you can't use politics to worry about economics. Sometimes political things can affect the economy, but that's usually economic news. So in this case, it's not that. And unless we have, go back to some kind of terrorist attack or something like that, I don't think what's happening in Afghanistan is going to make a huge difference in the market itself. Right now, the Fed is trying to determine whether they're going to start tapering. What does tapering mean? Basically, what they're going to do is they're going to start buying fewer and fewer bonds. And that, in theory, has the effect of starting to raise interest rates. So I started going back to see, what happened a long time ago with interest rates. Back in 1981, the 30-year Treasury was at 14.49% at its high back in September of 81. And last year, during this COVID crisis, the 30-year bond got down to its low in the last 40 years of about 1.33%, and that was in March. Currently, we're at about 1.9%. So you can see that rates are really, really low. Well, the government and the Fed, they've been very, very stimulative. They've been very accommodative. So interest rates have stayed low. It's not going to stay low forever. Inflation is starting to take effect. A lot of people have said it's temporary, and the Fed is still saying that it's temporary. That's what they're talking about right now. So we'll see what happens. But the 10-year Treasury, which was at 0.62%, so it was 0.6% back in April of last year, is currently at about 1.31%. So you could see rates have started coming up. People are starting to anticipate that's going to happen, and it wouldn't shock me at all if before the end of the year, that's what's going to happen, that the Fed is going to start tapering. And depending on your frame of mind, that's a good thing or a bad thing. So here we are, and we're looking for a stock market that September, again, is usually it can be a rough month, although the month of October is the month that the biggest scares have happened. Back in 1929, back in 1987, it seems like that's when the huge crashes have taken place. But we'll worry about that in another month. In the meantime, it looks like that the people who are investing in the market these days still are pretty placid. And I would say that it still looks like, even with all the stuff that's going on around us, that people want to still invest in the market. The other thing that people aren't talking about, I don't think, a lot of the millennials have really gotten into stock investing. And we didn't see that over the past maybe 15 years prior to the millennials. And I actually think that they're putting a lot of firepower into the stock market. Now, let's not kid anybody. A lot of these stocks are expensive based on their earnings, but the earnings have been terrific. Again, in this whole quarter, including in the month of August, the earnings that have been coming out, especially for a lot of the technology stocks, but even for more, have been really, really good. So we think that August was a fairly good month, a quiet month, but pretty good. Let's see what happens in September and for the rest of the year. And that's all we've got to say. So we'll see you next month, and we'll give you another monthly market report at the beginning of October. Thanks a lot. See you next time.